At CWM, part of our holistic approach to financial planning includes working with you and your estate planner to ensure beneficiaries are designated for your financial accounts. We like to say that having a complete and unambiguous estate plan is a gift to your children and heirs. Today, we're focusing on the importance of designating beneficiaries on IRAs and 401k accounts. Why? Because depending on the type of beneficiary, there are different rules that apply to the inheritance. Spousal beneficiaries have the most flexibility when inheriting an IRA. There are 3 options available to spousal beneficiaries. They can become the account owner and their RMDs will be based on their age. They can roll over the account into their own IRA within 60 days, and RMDs will start when the surviving spouse reaches age 72, or they can act as a beneficiary on the account, in which case the RMDs would be based on the original owner's age. However, when inherited by a child, sibling, or non-spouse, IRA accounts have a specific time frame in which the inheritor must withdraw funds, thereby creating a taxable event. The Secure Act mandates that non-spousal inheritors must withdraw all money from the inherited IRA account by December 31st of the 10th year after the original owner's death. This can be done in one lump sum, by setting up regular distributions designed to draw the account down over 10 years, or by taking different distributions whenever the inheritor wants. To make things slightly more complicated, there is currently a discussion amongst lawmakers and the IRS on whether a withdrawal must occur every year or not. It is something we are monitoring as the rules are updated. Depending on how the inheritor chooses to draw down the account in the 10-year time span, there are tax implications to consider. Let's take a look at a simplified scenario in which John inherits $500,000 from his aunt. Important information to know about John is that he earns $100,000 a year, which puts him in a 24% tax bracket. If John opts to take the $500,000 inheritance as one lump sum, he will immediately jump to a 37% tax bracket and owe roughly $163,000 in taxes. However, if he chooses to distribute the inheritance equally across 10 years, the total tax burden is approximately $118,000 as he remains in the same 24% tax bracket. One last scenario to consider: what happens if a beneficiary has not been designated on an IRA or 401k account? If that is the case, the estate inherits the account. During the probate process, the probate court then determines a beneficiary for the account. Should you inherit an IRA in this manner, you are considered a non-designated beneficiary and are required to distribute the entire account within 5 years of the account owner's death. Let's suppose John's aunt passes away without designating a beneficiary on her IRA. The probate court determines that John should inherit the IRA, but now, because he must draw down the account in a 5-year period, John's tax burden has changed with the shortened time frame. When compared side by side in a simplified illustration, the same $500,000 inheritance typically owes more in taxes due to the shorter window potentially changing the inheritor's tax bracket. No matter if you are a designated or non-designated beneficiary, distributions must be incorporated as part of your gross income at tax time. The taxes owed will depend on the amount that is withdrawn. We recommend working with your CPA to best understand the tax consequences when withdrawing from the inherited IRA. As part of CWM's annual plan review and strategy update meetings, we work with our clients to determine and review beneficiaries for all accounts under our management. We think it's important to review this each meeting as your situation and the situation of your beneficiaries can change. We believe the last thing that families should have to navigate while grieving is the uncertainty of a loved one's wishes and intentions. Should you have questions about the status of beneficiaries on your CWM managed accounts, or if you'd like to start a conversation with a CWM advisor about our holistic planning process, give us a call. We're always happy to help at Comprehensive Wealth Management.